The Great Market Fall. What they're not telling you. The following content is for educational and informational purposes only. It does not constitute financial advice or investment recommendations. All opinions expressed are speculative analyses based on publicly available information. Always conduct your own research and consult a licensed financial advisor before making investment decisions. Every bull market ends the same way, with silence before the fall. Stocks rise, optimism floods the headlines, and every analyst swears. This time, it's different. But history says otherwise. From the dot-com crash of 2000, to the subprime collapse of 2008, and the pandemic bubble of 2020, every financial peak has carried the same hidden signals. And today, those signals are flashing again. The question is not if the markets will fall. It's how far, how fast, and who already knows. In 2025, the S&P 500 reached historic highs, fueled by artificial intelligence stocks, speculative tech, and a wave of retail optimism. Yet underneath the surface, the numbers reveal a different story. Corporate debt in the US and Europe has reached record levels. Real estate markets, especially in China and Western Europe, are showing cracks. Consumer spending, the lifeblood of the economy, is slowing, even as prices remain stubbornly high. Central banks, once the saviors of liquidity, now face their own trap. If they cut rates, inflation will surge again. If they don't, debt markets will collapse. Either path leads to instability. And markets can smell fear, even before it hits the news. Every collapse has its catalyst. In 2008, it was subprime mortgages. In 2020, it was a virus. In 2025, the catalyst may be technological overexposure. AI-driven speculation has created trillion-dollar valuations built on expectation, not earnings. Companies with no profits are valued like empires. Investors pour in because they fear missing out, not because they understand what they're buying. And behind the curtain, insiders are selling quietly. Funds are rotating into cash. Gold demand is surging. The so-called smart money is leaving the table, while retail investors are still ordering another round. History repeats, only the instruments change. No market exists in isolation. And geopolitics is now the ultimate financial weapon. Trade wars between the US and China are intensifying. New sanctions ripple through supply chains. Energy markets remain volatile as tensions rise in the Middle East. Meanwhile, central banks around the world, from BRICS nations to Western powers, are quietly stockpiling gold and digital reserves. This isn't coincidence. It's preparation. A multipolar financial system is emerging, one where the US dollar may no longer hold absolute dominance. And when global confidence in the dollar wavers, markets everywhere tremble. Markets don't collapse because of numbers. They collapse because of belief. Confidence is the invisible fuel that drives every economy. When people stop believing, in institutions, in stability, in tomorrow, everything falls apart. Today, trust is eroding. From government data to corporate transparency, skepticism grows. Social media amplifies fear faster than any financial report ever could. And once the crowd turns, no algorithm, no central bank, and no promise can stop the stampede. The crash isn't the end, it's the reset. Every collapse destroys illusions and reveals what was real all along. In the ashes of the 2008 crisis, new technologies emerged. In the chaos of 2020, digital finance and decentralized systems took shape. This time, what rises may be even more transformative: AI-driven economics, programmable currencies, and a new era of monetary control. But with progress comes danger, because whoever controls the algorithm controls the world. So, when will the markets truly crash? Maybe soon. Maybe they already have. Quietly, behind the scenes, while we're distracted by headlines and politics. Because the real fall isn't measured in points or percentages. It's measured in trust. And when that trust finally disappears, the markets will follow.